Did you know that when you invested in physical gold to protect your portfolio from inflation, that gold was actually costing you money, and you still don't know it?
Most people have no idea how much they lose annually. They believe gold is a passive asset, but the math proves the opposite.
This is not an opinion. It is a certainty. It is the undeniable mathematical problem that Wall Street knows and hides in the fine print of their service agreements.
They call it the real wear and tear rate. This rate is silently eating the potential of your gains year after year without your knowledge.
Gold is the ultimate defense, but physical metal carries 3 financial burdens that devour your profitability. You must know them before losing more capital. First burden is the cost of custody. You are paying a fixed annual fee, either to a private vault or a bank safe deposit box.
Gold as an active liability. This is a guaranteed cost. Your gold must rise in price every single year just to cover that fixed vault fee.
Second burden is the cost of insurance. If you keep it at home, your home insurance increases. If it's in a vault, you pay extra for the insured value.
Third burden, liquidity. The third burden is the zero liquidity. You cannot sell your gold immediately at the real market price, and that is a major weakness.
These 3 structural barriers make the execution of an automated and disciplined defense impossible.
But a digital hack exists. A 6-step system that solves this mathematical problem completely. In this 6-step tutorial, I will show you the superior investment formula to eliminate these burdens.
If you value this revelation, comment "burden" right now. Take the action to comment. That is discipline.
Your participation is the only proof that this information was useful to you.
Do you truly believe physical gold is still the best option?
Take a moment and leave your opinion. We are going to solve this mathematical problem in 6 disciplined execution steps. Introduce Step 1. The path to digital gold starts with confronting your main fear. Step 1 is, do you believe digital gold is just another high-risk crypto? This is the mental barrier most people have. They confuse a gold token with a purely speculative, volatile cryptocurrency. The gold token is backed 1-to-1 by a real physical asset. It is audited, it is stored. The second step is choosing the disciplined vehicle by confronting counterparty risk. You have 2 smart money options: gold ETFs like GLD or digital gold tokens like PAXG.
The mathematical problem of ownership. If you buy an ETF, you own a share that represents the gold. You do not own the actual metal. This share is subject to the issuer's management. The custodian can change.
And if the issuer defaults, your investment is trapped in a costly and lengthy legal dispute. This is a counterparty risk that the disciplined investor should never accept. It is a structural weakness. The digital token, however, exists on a public blockchain. Your ownership is immutable, verifiable, and auditable by anyone, 24/7.
Ask yourself, what is the stronger proof of ownership?
A paper certificate subject to litigation, or a visible and auditable mathematical proof for the entire world. This is called segregated ownership. The digital gold is legally separated from the token issuer's finances. If the token issuer collapses tomorrow, your gold is still yours, with no legal process required. This is the guarantee. Discipline is based on absolute proof, not on faith in an institution. The digital hack gives you that proof in real time. Comment PAX or GLD now. Phase 3. Cost elimination. Step 3 is dismantling the real wear and tear rate, custody and insurance. The digital hack reduces your custody cost to a 0% operational cost. This is the first major blow to the mathematical problem. Vault custody charges a fixed fee, typically between 0.1% and 0.6% of your gold's total value every single year.
This fee is a constant drain. It is a guaranteed loss, regardless of what the gold price does.
If gold rises by 2%, but you pay 0.5% in custody, your real profit is reduced by 25%. A quarter of your gain is gone.
By choosing the digital vehicle, your gold is in a wallet you control. You have eliminated the first and most annoying burden.
Step 4 is solving the mathematical problem of selling, the hidden spread. Define the spread. This is the silent killer of your liquidity. The spread is the difference between the buyer's price and the real market price, spot price.
In physical gold, this hidden commission typically ranges between 3% and 5% of your capital. It's a brutal tax on selling. You are losing up to $50 for every $1,000 you sell. It is an instantaneous, guaranteed loss. It does not matter how well gold performs in the market. You lose that capital immediately upon liquidation.
If your gain was 4%, but the spread takes 3%, your net gain is only 1%. Is that a defense? With digital gold on high liquidity exchanges, the spread is minimal, typically under 0.2%. It's nearly the spot price. The digital hack gives you back that 3 to 5% of instant liquidity and converts it into potential gain, not commission.
An asset that charges you a 5% penalty when selling is not a defense asset. It is a liquidity trap, trapping your capital. This elimination of the spread is your true defense against panic. You now have 24/7 liquidity without penalties.
Money is earned and kept in the disciplined execution. Comment liquidity if you agree.
I warn you, the next 2 execution steps are the real hack. If you fail step 5 or 6, everything you have learned will be useless.
Phase 4. Disciplined execution. Step 5 is eliminating emotion through automation. Emotion is the only risk factor that discipline cannot tolerate in the long run. Disciplined investors never try to guess the market bottom. The solution is to set up a recurring automatic purchase, dollar cost averaging, or DCA. You need a weekly or bi-weekly purchase of your asset. Stability is the key to minimizing risk.
By automating the purchase of a small amount, your average cost balances over time, protecting you from short-term volatility. Panic is the main enemy of capital. Wall Street wants emotion to make you buy at the peak and sell at the bottom. It is a rigged game fueled by your fear.
DCA on Autopilot completely nullifies that game. Your investment becomes immune to panic and short-term fake news. Step 6 is tactical rebalancing. Discipline does not mean you leave your investment completely alone.
A defense asset must be monitored and periodically rebalanced to maintain its effectiveness and not become overly speculative.
Let's define a threshold. If gold grows to represent more than 15% of your total portfolio, you must act. It's time to trim the excess.
The hack is this. Sell the profit that exceeds that 15% threshold, not your base investment. Use that surplus profit capital to buy other assets that are below their average value or to reinforce your working capital.
This is called tactical rebalancing. It is how you keep your defense strong without it becoming too speculative or heavy. Once you systematize your DCA and your tactical rebalancing, you have converted a liability that cost you money into a real, self-sufficient asset.
Leave a comment with the word Final Defense. Tell me if you will execute automation and rebalancing. Action is the most valuable step.
In summary, 6 steps of disciplined execution. From the diagnosis of the burdens,
moving through the vehicle strategy, and the cost elimination, to the systemization of buying DCA and the tactical rebalancing.
This is the complete method that allows you to invest like Wall Street, but in your own personal account. The difference between an amateur and a disciplined investor is systematization. And you now have a defense system without structural weaknesses. If you apply this discipline, your gains will be limitless. You have solved the mathematical problem of your defense. No more hidden costs, no counterparty risks, and no emotion driving your decisions.
If this analysis helped you stop losing money to hidden costs, please like this video. Your support allows us to keep revealing these hacks. Now let's talk about the next level of discipline: spending. Most people are afraid of credit cards. They believe they are synonymous with debt and avoidance. But if you want the same 6-step analysis to discover the one rule that stops your credit card from generating debt and turns it into a tool, then subscribe to Digital Dollar Wallet. We publish weekly analysis that protects your portfolio and your wallet. Thank you for your valuable participation, and I'll see you in the next high-value analysis.